SpaceX went public. By the end of its first trading day, the market valued the company at nearly $2 trillion. Breaking down this $2 trillion valuation, isolating Elon Musk's 38% stake, the IPO added $760 billion to his net worth, making him history's first trillionaire. Compared economically, his fortune equates to 3% of the entire U.S. GDP. He didn't reach that number by depositing paychecks into a bank account. Instead, his wealth grew as the public markets reevaluated the future value of his ownership in his companies. Yet the richest man alive has repeatedly described himself as cash poor. His wealth exists almost entirely on paper. Look at this line graph tracking his net worth. You can see the rapid ascent to the $1 trillion peak in June, followed instantly by a sharp drop-off. A post-IPO slide in SpaceX shares wiped billions off his balance sheet. To see how a fortune this large actually functions, we have to trace his reinvestment cycle back to a $2,000 initial investment in 1995. Musk arrived at Stanford University in 1995 to pursue a doctorate in material science. He lasted exactly 2 days before dropping out to start an internet company, armed with just $2,000 to his name. He and his brother Kimball founded a directory software business called Zip2. To keep their expenses near zero, they slept on office futons, shared a single computer, and showered at the YMCA. Their bootstrapping paid off. In 1999, Compaq Computer purchased Zip2 for $305 million. Musk's personal payout was $22 million. While the sale made him a millionaire, venture capitalists stripped him of the CEO role. This left him seeking a way to maintain absolute operational control in his next venture. Instead of retiring, he immediately rolled the majority of that $22 million payout into founding an online financial services company called X.com, which later evolved into PayPal. 3 years later, eBay acquired PayPal. Musk walked away from that deal with $180 million. Standard financial logic dictates diversifying a windfall like that into safe assets to preserve wealth. Musk ignored that. He risked his entire liquid fortune simultaneously on 2 capital-intensive sectors, commercial space travel and electric vehicles. By refusing to hold cash, he transformed a traditional corporate payout into highly leveraged equity bets. This flowchart illustrates the mechanics behind his $56 billion compensation package at Tesla. Notice that the base salary routes to zero. His payout was tied to aggressive performance milestones that, when hit, unlocked massive tranches of stock options. At the same time, he maintained majority voting control over SpaceX, hoarding equity while scaling expensive projects like the Starlink satellite network. That concentration of ownership laid the groundwork for June 2026, when SpaceX finally went public. The initial offering priced shares at $135 each. If you multiply that share price by his retained 38% ownership, the final calculation visually crosses the $1 trillion threshold. He amasses corporate control and shares rather than liquid cash, relying on the public markets to multiply their value. But paper wealth is fragile. The immediate post-IPO sell-off caused SpaceX stock to dip, briefly stripping Musk of his trillionaire title just weeks after he earned it. Look at this block representing his entire net worth. Public perception often links his fortune to cryptocurrency, but when you isolate his actual look-through Bitcoin holdings, they form this microscopic dot, amounting to exactly 0.069% of his balance sheet. The real driver of his valuation is physical infrastructure. In Texas, SpaceX and Tesla are pouring $16.8 billion into TerraFab, a manufacturing plant designed to produce chips for their AI operations. His net worth is a highly volatile metric, completely dependent on the market's belief that these massive capital expenditures will eventually generate revenue. In 30 years, the math escalated from a $2,000 startup investment to a paper fortune capable of fluctuating by tens of billions of dollars in a single afternoon. Musk's trajectory shows a shift in the definition of wealth. For a trillionaire, value is no longer measured in liquid currency, but in the scale of leveraged risk across multiple industries. He built his fortune by using every available dollar as a lever to secure equity and dictate the direction of his companies.